heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, full chip coverage ahead. We're bringing you the latest headlines from Nvidia, ARM, Intel and more.
Plus, Apple nears a deal with OpenAI to add ChatGPT to the iPhone. Details ahead.
And shares of GameStop. They surge amid speculation that Roaring Kitty is back, liking the stock. We discuss that and so much more throughout this hour, but first let's turn our attention to the macro picture. Some new headlines coming out from the New York Fed when it comes to consumer sentiment of the direction of travel of inflation. And it's still running hot, 3.3% in terms of where consumers see inflationary pressures being in about a year. That's overall in the midterm. We're still holding on to gains, though, 0.3% higher. Remember, we get the CPI print on Wednesday, PPI on Tuesday. A lot to digest from the macro perspective. Two-year yield remaining higher, so borrowing costs coming down, yields slipping. So 2 years, money going in, yields go lower by some 2 basis points. Bloomberg Dollar Index also down a little bit. Look, some of the anxiety around inflation just dialing back a little bit on the day despite that New York Fed data. Let's move on and have a look at what's happening in the world of Bitcoin because, well, even though dollar's only off by about 0.1%, crypto is surging higher, up 2.4%. And Ed, I know you're going to focus in on GameStop. And this is more the read across from some of that meme stock frenzy and what it means on the related names in crypto. We're up 2% on Bitcoin. What have you got on the micro?
GameStop. Meme stock mania is back. This is a 2-day chart to kind of illustrate the point. GameStop was up 110% in the session. It was halted. We're now up around 60%. And it's just from one social media post from Roaring Kitty, a.k.a. Keith Gill, a.k.a. The source of all the original interest around GameStop. You know about the movie, you know about what happened on Reddit. I think Reddit's higher, Robinhood is higher. There's a lot of trading that's going on. Later in the show, we're going to dig really deep, but I give you GameStop. We're looking at other stories in the chip sector in principle. There are 3 clear headlines in semiconductors. Intel is up 3.5%. The Journal reporting it's close with a deal with Apollo for $11 billion of financing for an Ireland fab. ARM is up more than 5%. Nikkei reporting that ARM is readying an AI product next year. Didn't say where it got the info, but SoftBank's going to support them financially to bring it to market. And then Nvidia is actually higher, 0.3%. It had been lower after the information reported that China is instructing domestic companies to stop ordering chips from Nvidia. We have a very big segment coming up. Everything chips. The big take today is on chips. There are a lot of individual stories to pass through. There is a lot going on.
And there is a lot of discussion of China vis-a-vis the US coming from, well, key leaders in US government. We had a great conversation with Janet Yellen earlier, our own Anne-Marie Horden, sitting down with her for an exclusive, really discussing China in particular. Janet Yellen really feeling that China is not playing by the rules on trade and sort of going on to say that maybe we will see China escalating in the so-called tit for tat on trade. Just take a listen to what Treasury Secretary told us earlier.
He believes it's unacceptable, as I do, to be completely dependent on China in these areas. And he wants to make sure, given that China is really not playing by the rules in the sense they have enormous subsidies in critical areas of advanced manufacturing.
There's a focus on increasing tariffs at a time where there's anxiety around inflation. How does this alter the picture of your investment landscape? I'm pleased to say Janet Mui is with us, RBC Bruin Dolphin, Head of Market Analysis. And it is a time where investors try and navigate seeming headwinds, but an ability to keep on going for the growth of AI. How do you think this lands the China versus US at the moment, Janet?
Good morning, Caroline. Thanks for having me. I think in terms of the tech investment side, we will still be heavily preferring the U.S. I mean, the U.S. is a hub of innovation, and I think the regulatory pressure on China would remain, and I think the trade tension primarily will hit China more than the U.S. So I think from an investment perspective, I think all these trade tensions obviously is not great from price or from global growth, trade, and the global market uncertainty point of view, but I think sticking with the US investment seems to be the right approach.
Exactly. I'm trying to pass all of this together, right? I think there's a growing confidence that inflationary pressures are easing off. But a big part of that is US fiscal policy, right? We're talking, or Janet Yellen talking about how China has some anti-competitive practices. But here in the United States, if you take the chip industry, this country is also pumping billions of dollars into supporting its growth. How does that impact you as an investor?
I think the clear evidence is that there's a lot of investment from a sovereign perspective into semiconductors, given it is such an important strategic sector. So I think the conclusion is that there will be lots of money going into it, lots of investment, a lot of big players will be involved. And I think primarily, the US companies are likely to be benefit from this initiative. And that's why we still have a positive stance on the general semiconductor value chain story, either from the equipment production or from the design, from the manufacturing, the foundries, along the whole supply chain. I think there's still going to be lots of investment going into it. I think valuations in these US companies are still quite reasonable, given that there's strong earnings growth. And I think we still have pretty good visibility into the 2025 earnings from the orders guidance, et cetera. So I think the investment thesis we have is that invest in US tech, particularly favoring in the semiconductor sector.
Janet, do we see a rate cut from the Fed this year, to your mind? And if so, when and in what increment?
Well, it is difficult to say. I think the bar for a rate cut is definitely higher now. We'll wait the CPI print on Wednesday, but I think the Fed, they have a leaning on the next move being a rate cut rather than a rate hike. So I think there's still some preference on eventually cutting. I think they're really itching on doing that, but they just need the data to allow that. So our view is that it's more likely to happen in the fourth quarter, but I think the Fed can really move, when the data allows. I think there's a lot of chatter about how the Fed may not be able to move because of the timing of the presidential election, but we think the Fed will focus on the data instead of trying to appear not to be political.
I want to go back to what you just mentioned about valuations looking pretty good at these levels, and many, Janet, have just been, holding their breath at the ARM 90 times future earnings valuation that we've seen, and ARM pops on the day. We're going to have a much deeper dive into the chip sector in a moment with our own Ian King. But Janet, from an investment landscape perspective, do you have to keep on building in the AI infrastructure play, or do we broaden out at this moment?
So I think to your point about the valuation of ARM, I can't really comment on the individual company, but obviously we know that within the sector there are a lot of players, and there will be different ranges of valuations. So I'm talking about as a group, because of the strong earnings growth. I think some of the major players the valuations are reasonable, but you have to really look into individual case. I think in terms of the broadening of the theme, we already have seen that. There is more confirmation from mega cap tech companies that there is commercialization of AI that is gaining traction. We see that from Alphabet, Microsoft, Amazon, for example. So it has broadened out beyond just the chip sector. And I think there has been quite a significant pickup in the utility sector, right, because of the electricity demand. So I think that they will continue to broaden out, but I think it has already started.
I look at a valuation of one particular meme stock today, Janet. 3,000 times future earnings is where the current price of GameStop is. Are we going to see meme stock frenzy really hit us hard once again?
Well, it is hard to say. I think right now we are seeing a couple of individual stocks having that reaction. Not sure if that's going to last. It's a lot driven by social media. But I do think that what the current situation is an indication that the risk sentiment is back. I think the positive risk sentiment is not constrained anymore by these high interest rate environment, these current level of bond yields. I think the market rally or the market sentiment has already we already passed the stage when it's totally just driven by the Fed and bond yields, for example. So there's clearly plenty of cash still sitting around, waiting to be deployed.
Right. Risk sentiment is back, says RBC Brewin Dolphin Head of Market Analysis, Janet Murray. Great to have you on the show. Thank you. Now, coming up, we're going to have full chip coverage ahead and take a deep dive in today's Bloomberg Big Take, which is on the global battle for chip dominance. Caro.
Let's just have a quick look at, other areas that you want to be looking at. Networking in particular. Cisco, of course, have been doing deals with Nvidia earlier in the year to really be amplifying its own AI offering. But we're anticipating, of course, Cisco earnings after the bell were up some 1.5%. But we're looking at how we continue to anticipate the third quarter earnings for this particular player. This is Bloomberg Technology.
Let's continue our coverage of semiconductors as today's Bloomberg Big Take focuses on the $81 billion investments made by the US and European Union towards the next generation of semis. Joining us is Bloomberg's Ian King, one of the members of the team that went through this with the Big Take. We have a case study today, right, which is Intel in Ireland, the journal reporting that there is advanced exclusive talks with Apollo for $11 billion in financing. Actually, we broke that they were in talks quite some time ago. But the need for cash and a global footprint is clear through the lens of Intel.
Yeah, no, I mean, Intel is actually in a slightly different situation to some of its rivals like TSMC and Samsung. Frankly, it needs the money way more than they do. They can afford to be selective where they take government money, what terms they take. Intel, because of the situation it's put itself in over the last 5 or so years, really needs the cash from pretty much any source it can get if it's to fulfill what it's trying to do.
And let's talk about fulfilling what it, and more broadly, the US is trying to do, what globally countries and companies are trying to do. Do we get to an extent where we have too much supply in?
I mean, this is the concern. At the moment, the concern really, though, is focused on what's called the sort of legacy chips, the older types of production. The type of thing that Intel, TSMC and Samsung are building here in the US, frankly, there's not enough supply of that kind of production right now. So not so much worried about that, but some of the more simpler kind of stuff in view of the amount of production being put in place in places like China, that is certainly something that people are focused on and worried about.
AI is a big driver of this. Let's take a look at today's Big Take specifically. The headline, Global Chip Battle Intensifies, with the $81 billion subsidy surge. But within that, there are two different stories. There's kind of like the long-term capacity onshoring story, and then there's like everyone's knee-jerk reaction to keep up with what's happening in real time.
Yeah, I mean, everybody's focused on AI, but if we believe that this is the future of computing, if we believe that this isn't just a step function, that this is something quite dramatically different, then obviously the ability to control that has enormous implications, both in terms of economics and in security. And having that production close at hand is really important.
And this goes global, not to mention what's currently underway in reporting with ARM getting more deeply into AI and SoftBank banking that. We've got so much to digest. Ian King, a brilliant deep dive when it comes to the Big Take. Go read it online on your terminal. But let's stick with what this all means in terms of competitiveness, US versus China. President Joe Biden is said, of course, to not just thinking about the chip sector, but more broadly about tariffs, quadrupling them on the Chinese electric vehicles, for example, sharply increasing levies for other key industries. And it's set to come as soon as today. For more, let's bring in Liza Tobin, Senior Director for Economy at the Special Competitive Studies Project. And Liza, we were just talking about this in the context of a frenzy of money from government to support the chip industry. But meanwhile, Biden's trying to push back EVs coming to China, trying to push back solar coming to China, from China to the US. Is that really got any bite to it? It seems more like bark right now.
Good morning, Caroline, Ed. Great to be on with you. Yes, no, this is a really strong move from the Biden administration. As you noted, the reports are saying that they are thinking of quadrupling the tariff rate on Chinese EVs. As we know, China has rocketed to become the top producer of EVs in just the last few years. They struggled for a long time to build a competitive auto export industry, and now they have gotten there with EVs. So currently, U.S. automakers are insulated by the existing Trump-era tariffs, which are about 27.5%. But clearly, the Biden administration is concerned that going forward, China could use its dumping strategy to underprice U.S. automakers and flood the market, as they are already doing in Europe and elsewhere.
Liza, good morning. It's Ed in San Francisco. So as you point out, sources say that the EV tariff would rise to 102.5%. But based on what you just said, I don't get it. I checked, okay, and there are 4 China-made EVs that retail in this country at incredibly small volumes. Polestar 2 and 4, the new Lotus that's coming, and the Volvo EX30. But what's the point in the tariff if those are the only 4 models available and they only sell in very small numbers?
The Biden administration is trying to get ahead of the flood. So as you noted, right now, we are insulated. American consumers are, by and large, not buying Chinese EVs. They're not coming into our market, but I think they see the writing on the wall. German automakers are under threat. Europe is importing these things. They're going into Japan. They're going in elsewhere, threatening other global automakers. So if the Biden administration wants to give the IRA subsidies, the Inflation Reduction Act subsidies, which, of course, incentivize green tech production here in the United States, I think the administration wants to give these incentives a fighting chance so that we can retain an auto industry here in the United States as the world transitions to EVs. So it's actually a good time to raise the tariffs because it won't directly impact people's pocketbooks because, as you noted, Americans are not yet buying Chinese EVs.
And yet, Liza, you know, when you're thinking about special competitiveness in particular, this is the project that you focus in on, all of this is undermining ultimately the efficiency of global trade. Subsidies here, tariffs there, all of it will sort of disintermediating what should be just the natural flow of things. Is this what is necessary, ultimately, from your perspective, to ensure that US does remain competitive when it comes to key industries?
There has been this national debate over efficiency versus resilience. And the lesson from COVID, from Russia's invasion of Ukraine, from these other global supply chain crises we've had in the last few years is that efficiency, economic efficiency, is not the only thing we need to think about as a nation. And so there's been increasing discussions of resiliency and what steps do we need to take as a nation to make sure that we continue to build emerging technologies here in the United States. We have suffered from massive deindustrialization over the last several decades as we've outsourced the production of our technology to East Asia, especially China. So now there's a national conversation about looking ahead. We want to make sure we're able to build some of these emerging technologies here in the United States, not only design them, but build them, because that's essential to our long-term growth in productivity, as well as our national security, making sure we can make things here at home.
Liza Tobin of the SCSP, thank you very much. So coming up on the programme, French President Emmanuel Macron touts billions of dollars in foreign investments from tech giants. We're going to have those details next. Karen.
Such global conversation. Meanwhile, let's just focus in on what's happening for a US stock over here. We're up 17% in the last couple of days on Squarespace. Why? It's going private. Permira, an all-cash transaction valuing the company at approximately $6.9 billion. We're going to see some VCs giving some more investment. General Atlantic, Accel, for example. This is Bloomberg Technology. Microsoft. It plans to spend $4.3 billion building cloud and AI infrastructure in France, announcing its latest major outlay on artificial intelligence technology. Now, Microsoft is aiming to help train 1 million people, support 2,500 startups in France by 2027. Now, earlier this year, it unveiled a partnership and a 15 million euro investment into Mistral AI. It's a Parisian startup competing with, of course, the likes of OpenAI. And look, we want to stick with France, with investment in France, because Emmanuel Macron has just unveiled more than 15 billion euros in foreign investments from US tech giants like Microsoft, but also like Amazon, like IBM, like banks such as Morgan Stanley. It's all a part of, well, trying to spur France's economy, to repair its public finances, basically establish Paris as well as Europe's post-Brexit business and financial hub. Joining us on all of this is Bloomberg opinion columnist Lionel Laurent. Lionel, it's interesting. It's a bit of a PR exercise that happens every year over at the Elysee Palace. But what ultimately is being done by Macron to inject some optimism?
You're right, Choose France is a bit of a cheesy slogan. It could be the cover of an investment brochure, but it's not just PR, because since he's become president, this has really been about the art of the deal, Macron style. Every year he gathers 150, 180 international CEOs, wines and dines them in Versailles, and gives them the pitch of the French economy. He'll say it's doing its job, it's doing the work. He's done the work of reforming France. And what are you going to do for France from the corporate side, which is invest? And I think that puts it, I think, a cut above Davos, because there is investment. You could argue if it's expansion of existing stuff instead of new projects. You can argue if even 15 billion is that sort of world-changing or impressive at the level of tech. But look, I think there is something genuinely real to this. There's a seed of depth to this that's not just PR.
Yeah, Lionel, I think Mistral put France on the map a little bit, in terms of the conversation around AI development. But beyond that, we don't often go to you, during the programme as frequently as we do other countries. And it's at a time where France's economy is on a shakier footing. Wow,
that cuts deep.
Brutal, Ed.
Yeah, brutal. I think you touched on something which is about relative worth, right? Now, Macron came into power at a time when the UK was effectively voting itself out of European leadership with Brexit, and Angela Merkel's twilight years had begun. I think, honestly, as long as the UK is seen as a kind of Brexit-tainted economy, and as long as Germany's industrial model is seen to be suffering, France will still have a card to play. Now, I think those two cards, to be precise, are human capital. It still has smart, talented engineers being pumped out of its graduate schools and universities. And the other thing is tax credits. There's an R&D tax credit in France that explains why so much of what you're seeing is R&D research centres, whether it's tech or banks. So clearly there is something in it for these companies. It's not just PR.
Lionel Laurent of Bloomberg Opinion from France. We appreciate it. Thank you. And stay with us. A Bloomberg exclusive with the French president. That interview of Emmanuel Macron coming up at 1 p.m. Eastern Time. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
Caroline Hyde back in New York. Let's check on these markets, Ed, because we're managing to hold on to our gains in the face of some inflationary pressure being shown by the New York Fed, that consumer sentiment showing that still there's elevated inflationary anticipation coming from the consumer base. But on a week we have CPI, and a week we have PPI. We're just cautious ahead of those macro pieces of data. We're up 0.1% on the NASDAQ. 10-year yields just holding lower at 4.48. I'm looking at Bitcoin managing to ramp up 2.75%, let's call it. Dollar a little weaker. But is this more of a spillover effect from the meme stock frenzy? Let's move it on and shine a light what's happening with good old GameStop. We are so back, up 63%. But is Keith Gill so back? Will he return to social media? Of course, he did pop a particular picture on X, many feeling that perhaps Roaring Kitty is back when it comes to liking GameStop. And meme stock mania seems to be back, and we'll talk about it later. I shine a light on what's happening with the chip sector. The stocks index actually up 0.4%, coming off of its highs, but we've had some notable names pushing higher. Intel, that reporting from the Wall Street Journal, building on Bloomberg's reporting that maybe we'll have some financing from Apollo with Intel to build yet more ultimately industrial capability, manufacturing capability, this time in Ireland. We're also seeing what ARM is currently up to on the day, as there's anticipation that they're going to be focusing more on AI thanks to SoftBank. I'm looking at Alphabet, though, up by 1.6%. Why? More competition. Are they not going to be able to integrate Gemini within the new Apple iPhone? Is it going to be OpenAI that wins out? Apple up more than 1.6%. Ed, deep dive on it for us.
Yeah, let's get more on that potential OpenAI Apple agreement and bring in Bloomberg intelligence analyst Anurag Rana. So, Anurag, as you know, Bloomberg reported quite late Friday night that Apple and OpenAI are close on a deal to bring ChatGPT to the iPhone. You published your reaction this morning, and in summary, you're saying it's a pretty sound strategic move. Outline your thesis.
Yeah, so when you think about it, Apple's not been at the forefront of generative AI. And the next WWDC, or the Worldwide Developer Conference in June, is really, aimed at AI. And if Apple's not able to showcase really cool features, then you're not going to have another round of, bad iPhone sales over the next 12 months. So they really need to push something out that gets consumers excited. Go get a new phone. Requires a little bit more, you could say, processing power. All sorts of things that go with it. So from that point of view, I think it's a good deal if they partner with somebody. Personally, I'd like them to partner with both of them, frankly, not just with OpenAI, but Google also. Because, as you remember, when it comes to search, Google pays them quite a bit of money. And I personally don't want that partnership to go away for any reason.
Was it also, though, basically an acknowledgement, as we've heard with perhaps teaming up with Alphabet and Gemini, that they just aren't going to be innovating themselves on this level? Would they ever usurp and build their own large language model, or is that just not where they're going to be bringing AI to bear?
See, they are spending money, and I'm sure they'll have their own technology that goes into it. But as Apple has done it in the past, they like to partner with other companies that specialize in that area. And there is no secret. They have that deal with Google when it comes to search. They use cloud resources from AWS. They use cloud resources from Google. So they don't want to do everything in-house. And if this helps them to sell more iPhones next year, I'm okay with them going and partnering with anybody that's out there.
Anurag Rana, loving it. Bloomberg Intelligence, thank you very much for shining light on your own thesis. Let's get that of Tom Forte, D.A. Davidson analyst. And it seems to be the marriage that the investor base wants to see, but not on Alphabet's perspective.
Yeah, I think from Apple's perspective, investors are anxiously waiting for the company's AI strategy. So whether it's using Google or whether it's using OpenAI to create and advance the strategy, I think that's something that potentially could get investors excited. I just am concerned, though, that you may not see the boost to iPhone sales. They certainly need the boost. It's still half their revenue today. And that at least on a near-term basis, AI is still a chip story for Nvidia or a hyperscale cloud computing story for Azure, AWS, or Google Cloud.
Tom, Anurag said that if this helps sell iPhones next year, it's a good thing. There's a much bigger discussion happening in the smartphone market about whether or not this is the year of the AI smartphone, principally focused on Android powered by a Snapdragon processor. Do you see an upgrade cycle if this deal gets done?
The answer is, I think of the upgrade cycle from 5G as being kind of the bellwether. And the advantage there was that the carriers had invested billions of dollars to upgrade their network. So they were very vested in getting an upgrade cycle. To me, if you want to call it a potential AI upgrade cycle, I would put that as a distant second to the 5G upgrade cycle. But right now, I think Apple could use any help when it came to selling the iPhone, given the overdependence. Again, half their revenue last year came from iPhones.
I mean, it is key. They're also, of course, all in on services, and I suppose that's also a key driving force here. Ultimately, Tom, there has been this hand-wringing, this worry that Apple is behind the curve and that, yes, they made the pivot away from the cars, but it comes too little too late. Do you have optimism that they can steal that back, particularly for AI on device?
No, I do not. And I still actually wish that they would return to cars. I've talked about how I'm a Tesla Model 3 owner, and I see a million opportunities for Apple to do it better. Again, I think we have to keep it in perspective. AI could be a tremendous boost to Apple's sales and profits over the long term. On a near-term basis, it could have a positive impact on, I guess, iPhone 16 sales to the extent that they're able to market something interesting. But I think investors have to be realistic on the near-term expectations over the next 12 to 18 months on Apple's ability to leverage AI, and it's just not as compelling as a lot of the other big tech companies.
Tom, there's a lot of frenemies out there at the moment. I asked our audience on social media, is an Apple OpenAI deal for ChatGPT on the iPhone good for Microsoft? Because I'm trying to make sense of all this. Most respondents said good for Microsoft. What do you think?
Absolutely good for Microsoft. When you think about Microsoft's involvement with OpenAI, it's good for Microsoft. So yes, I think that I like how you use the word frenemy. This is a challenge for Apple, which is, does it want to leverage OpenAI, given its relationship with Microsoft? Does it want to leverage Google? Does it want to entrust someone else to something that could potentially be this important, being artificial intelligence? I still look at the Siri as an opportunity for Apple to do something better there. So this is certainly a challenging situation for Apple.
Come on, Siri, you can do it. Meanwhile, Tom, what about the Vision Pro? Going on sale to more countries, we understand China, Japan, France, Germany. Going to help?
At the margin, yes. I think the most interesting thing we learned about Vision Pro in the March quarter was how they talked about it at the enterprise level, which maybe makes the $34.99 price point make more sense. But the challenge, we talked about services. Hardware sales were down double digits in the March quarter. And I think if you continue to have declines in hardware, at some point that's going to translate to lower services sales, which is another challenge for the stock.
Yeah. Ed, I misspoke. Likely to expand to China, to Japan, to France, to Germany. Likely, Ed.
Yeah, and I think most people would say it'd be a bit foolish if they did not. Tom Forte, Managing Director of Maxim Group. Great to have you on the program. Thank you. Now, coming up on the show, Archegos founder Bill Huang is defending himself against fraud and market manipulation charges in Manhattan today. We go outside the courthouse next. This is Bloomberg Technology.
Let's get out to a Manhattan federal court where Archegos capital management founder Bill Huang stands trial over his firm's 2021 collapse, facing charges of fraud, of racketeering, conspiracy that could end with him behind bars for the rest of his life. He's being tried alongside the former Archegos CFO, Patrick Halligan. Outside that courtroom, Shonali Basak. And we understand that the defense lawyer for Bill Huang, currently Barry Burke, is taking the stand, really talking about how investment banks were falling over themselves to work with the company, and really some of the bets that he made from our perspective in tech was Viacom CBS, now Paramount, saying content was king, Shonali.
Yeah, he is really driving home that argument. To your point here, you do see the defense counsel now speaking right after the prosecution had made their opening argument. And the defense is making this case that Archegos was a family office and it was not responsible for outside money. Bill Huang was responsible for his own funds. It also made the case there that when he made these bets, it was his own money that he lost, not investors' money on the outside, although we do know separately that the banks themselves had lost a significant amount of money through engaging in these swap agreements with Huang's firm. Now, we look at the defense here, and they also talk about the nature of the bets themselves. You may remember when all of this started to unravel, it was around Viacom CBS. So you do have the defense attorney speaking to a jury largely not versed in the world of finance, Caroline, and explaining that Bill Huang was betting on stocks that he believed in, and that's why he was betting so much. Some of his earlier bets, like Netflix, were hugely profitable for him back in the day, and now when he was thinking about the new bets put to work, he was making the case that content is king, like you're saying,
right.
And that's why he bet so much on Viacom, essentially through borrowed money.
You know, for US prosecutors, this is a big white-collar crime case. You know, it's up there in terms of the scale and the action by their offices with what happened with FTX and others. What are you expecting to happen, Shonali? How many days, weeks will this go on for?
It could take a number of weeks. And remember, we do have just the opening arguments as we've been talking about. We could hear from witnesses, Ed, as soon as today. One of the early witnesses very early on in this trial will be, for example, counterparties over at UBS that was on the other end of the Bill Huang call when it came to asking for margin. Now, I would also say, remember that there are two people that worked at Archegos that have pled guilty and can also be testifying potentially throughout the course of this trial in those weeks. And one big question mark was how much they acted alone or because of the culture at Archegos and directed by Bill Huang to do so. This will get quite contentious because we know that the defense plans to show that the banks acted on their own. You saw it in the opening arguments, this idea that these banks were falling over themselves to work for Bill Huang when he was at his height. Now, remember, another piece of evidence that we wonder about whether it will show the light of day and how it will be used is Credit Suisse's own risk profile and risk assessment of itself as it failed. As we know, Archegos wasn't the only reason Credit Suisse had failed, but it was a massive contributing factor to those significant losses faced by Credit Suisse as it was failing. So a lot of complicated questions in the course of this trial. It could take weeks to play out. They're facing a number of charges here, including racketeering, securities fraud, and wire fraud. The charges alone each could face up to 20 years in prison. And as we know, some of the attorneys in here, the prosecutors, were involved in the FTX trial very recently as well. So this is an office coming very hard down on white-collar crime.
Shonali, has anything changed to protect this happening again from family office perspective, from counterparty perspectives?
That's the best question, I think, coming out of this, because this trial does have the potential to draw light again to a lot of the practices that got us here. And if you think about it, swaps rules in some form have been altered. The SEC had taken a look at it. The SEC and the CFTC have fought over jurisdiction around a lot of these trades. Some of the ways that they have been changed were simply post-2008 Dodd-Frank rules that were changed not until recently. But to the point about family offices and disclosure, that has not been changed. And that is something that regulators may take a look at once again, given what happened here and given that nothing is really different for any future problems.
Shonali, it's loud out there. We thank you for being outside the Manhattan court. Now, let's go to you, Ed.
Yeah, let's get some other news headlines in today's Talking Tech. And first up, SoftBank laid out plans to get more aggressive in AI and other fields after reporting a second quarter profit and surge in the value of assets, including a surge of ARM stock since the IPO last year. Plus, Xiaomi aims to begin making and selling an SUV similar to Tesla's Model Y as early as 2025, embarking on a major new expansion with production of its debut SU7 electric car set to reach about 100,000 units this year. And 01.ai, the Beijing startup founded by tech pioneer Kai-Fu Lee, is introducing its first AI application for consumers, a step aimed at helping China capitalize on the promising technology. The firm's free productivity assistant is called 1G, and it's the latest in a series of AI products it's developing. Kai-Fu Lee spoke with Bloomberg's David Ingles and Yvonne Mann about that and competition from big tech companies. Listen to this.
Companies like Meta, Google, Microsoft are putting 50, 100 times more resources in this. So we certainly don't take it lightly. So as we catch up with the currently best model, we realize that even better models will come from OpenAI and others. And we want to stay as close as we can. But we also think it's about building a great user experience. It's really understanding what the users want and using that, which is China's advantage, as Jen said earlier. If you think about Chinese applications, TikTok is better than Instagram. Products like Temu and Shein have taken over the world. Users love it. I think China's ability to develop great applications that focus on what users want and that product market fit is a unique attribute to Chinese companies.
Hi, Fu-Lee there. Coming up, we're so back on meme stocks. GameStop surging after the long-awaited return. We anticipate the social media Keith Gill taking back to X. Investor, of course, known for spearheading 2021's meme stock rally. We'll discuss that all next. This is Bloomberg Technology.
GameStop shares surged amid speculation on the return to social media by Keith Gill, a.k.a. Roaring Kitty. And it's driven a meme stock mania emblematic of what happened in 2021. That's his latest post on X. You see it right there. What does it mean? Let's bring in Bloomberg's Bailey Lipschultz, who, along with meme stock mania, is so back. Bailey, you're back. Roaring Kitty's back. But what does that mean?
I don't know, Ed. It means that he's back to Twitter. He posted a video that actually had clips of the movie Wolverine. He also posted a montage that had Ferris Bueller on his day off. It's a lot of questions, and it's circulating Reddit, StockTwits, Discord, you name it. And investors are speculating that if Roaring Kitty's back on social media, maybe that means he likes the stock again, and maybe that's a reason people should buy the stock. That's really the galaxy brain of the retail crowd at this point as it relates to GameStop.
Because, yeah, just give us the context of where else this has lit a fire. Not only just GameStop, but crypto related to GameStop. And also, well, just heavily shorted names that are out there in the retail space.
Exactly. Everything that moved back in 2021, COS, AMC, you name it, Beyond, which bought the Bed Bath & Beyond brand from the company after it went bankrupt, is rallying. Caroline, it's really just kind of like a question around what the next stock could be. And it almost brings back the shades in the argument around, is this retail traders or is this Wall Street? And are people speculating where they can put money to work and what actually is driving the rally? Because when you look at what happened back in 2021, obviously the retail crowd was part of it. Obviously they were buying call options, but there are a lot of questions around who else was buying because Wall Street doesn't really let other people make money if they can get in on the trade.
Well, precisely. So is this going to target short stocks and any particular hedge funds in particular, as we saw back in 2021? But also, do the retail crowd want to be piling in using Robinhood once again? Because Robinhood came out sort of a foe and a friend in this situation.
Yeah, the whole debate around removing the buy button is an area I don't want to get into. But it does
no
seem...
confetti.
But it does seem like we are still seeing those animal spirits. And that's really one of the questions is who's buying and who's selling? Because we saw GameStop up 68% in the 3 weeks prior to the Roaring Kitty post. We saw the busiest week from a volume perspective since April 2022. So people were buying the stock. Out of the money call options were active in the 2 weeks leading up to today's rally. So a lot of questions about what actually was going on under the surface.
I see some animal spirits in you, in your reporting, and your grasp of the data. There are some animal spirits in other names, like Reddit's higher, Robinhood app was higher. I saw on Down Detector that E-Trade has been difficult for some users since the open. So take that information and just explain the basics of the relationship of the trading in these names and what's happening with meme stocks more broadly.
So we're seeing really a pushback into a lot of those retail names, and that's new names like Trump Media and Reddit and old names like AMC and COS. But we are seeing a lot of these systems being inundated with buy orders, and that really can put a strain on some of the systems to try to pair up buyers and sellers, and that's why you see a number of these trades kind of potentially fail to deliver and a number of other issues. This is not the short mania that it was in 2021 when over 140% of GameStop was sold short. It's closer to 24%, but this is creating a lot of issues for the underlying systems that are trying to match up these buy and sell orders, and that also with the volatility and with some of the swings where people were trying to put in orders at, that's why we saw the stock halted 8 times for volatility in the first hour, because there was so much of an order and an order backlog among these retail platforms that have clients that do not have access to after hours or pre-market trading. So that also can create kind of this bottleneck, if you will, of buy and sell orders in that first 60 minutes. Even the first 10 minutes of trading was quite volatile and quite hectic.
It's back. It's up and trading right now. And Bailey Lipschultz, have a feeling will have a busy day. We thank him on all things meme frenzy. Meanwhile, look, that does it for this edition of Bloomberg Technology. There's some discussions happening and what's OpenAI is about to announce in the next couple of minutes.
Yeah, so a big event coming up at the top of the hour. And now you've got a hard choice. Tonight you can recap the podcast, Bloomberg Technology, which is a must listen, or you can watch the movie Dumb Money, which is basically a biopic of Roaring Kitty. Check both out. This is Bloomberg Technology from San Francisco and New York.